John, thanks for joining me, man. We're recording this and Bitcoin just hit 108,000. It's been absolutely ripping over the last month. Looking ahead over the next 12 months throughout 2025, what do you anticipate for Bitcoin? Can this rally sustain? Like, what are the primary bullish catalysts you're looking at? What's your overall market look for 2025?
Yeah, man. Good to be here with you, Mitch. Love chatting with you, as you know, and let's get right into it. So basically, when I've had a lot of people ask me, similar question, what's your general outlook for Bitcoin? And that could be clients who I talk to, could be friends and family, former coworkers, media outlets who are looking for commentary on it. And generally speaking, I've pointed to three things. One is continued easy fiscal policy. This is like the nothing stops this train meme that Lynn Alden has popularized. Can pivot to easier Fed policy, declining rates, and the Fed put out a report at one point that they said they expect to increase their balance sheet at some point in 2025. And then thirdly would be increasing I used to say gradual increasing in adoption. We can debate how gradual it's going to be, but increase in adoption of Bitcoin activity, Bitcoin holders, from individuals, family offices, high net worth corporations, and potentially nation states. So those are three things that I've typically pointed to. The fiscal side is supportive for Bitcoin. The monetary side is supportive for Bitcoin, and the adoption is just continuing. What I think is the most interesting out of those things is the adoption side, because that's been an interesting one that we could have talked about for a while at any point this year. But what's kind of changed in the last few months is the gear that it's been kicked into. And what I'm referring to there is on the corporate adoption side, obviously MicroStrategy and their playbook has just kind of opened this door, whatever you want to call it, speculative attack, tapping into traditional markets to get Bitcoin exposure. We can get into all that, but that's like, that kind of adoption has really picked up. And then on the nation state side of things, with a Trump victory in early November, that obviously was the catalyst for a big uptick in price, going from high 60s to now we touched 108K this morning, like you said. So if, we'll get into this, but the punchline on nation state adoption is if the wealthiest, most powerful country in the world signals to everyone and says, hey, we're going to hold Bitcoin as a strategic asset, just like we hold gold as a strategic asset, that kicks off a daisy chain of nation state adoption that we've been talking about for a long time. And it might actually be here in 2025.
Yeah, it's so strange because when I first got into Bitcoin, everybody was talking about that. And it seemed like this hypothetical scenario where nation states compete to buy as much Bitcoin and mine as much Bitcoin as possible. Now it's literally happening. And I saw Eric Trump at the Abu Dhabi conference recently, and he understands it, right? Like Trump, he'll talk pro Bitcoin and pro crypto, whatever. And like, he's an old guy. And so people kind of like don't take him as serious. Oh, he's just parroting points, but like maybe he is, but the people around him really understand it. Like Eric Trump, his son, really gets it. And so I fully expect follow through when he's inaugurated in January. I think the strategic Bitcoin reserve is going to happen. I think it'll happen early, maybe not day one, but sometime within probably Q1 of next year. And to me, that like there's no upside limit to how high we can go if nation states are competing to buy it. But I'm kind of with you on the adoption being the most interesting part. And specifically, I think it's the corporate adoption, right? Because the nation state adoption is like, it's probably going to happen. It's really bullish, but the corporate adoption, I think, is more interesting to talk about, specifically MicroStrategy. I found myself being very bullish on MicroStrategy. It's almost been like a orange pill moment for me. Like when I first got into Bitcoin, I feel that way about MicroStrategy, super bullish. What's your thought on it? Because a lot of people, there's varying opinions across the Bitcoin community. Some people call it a shitcoin. Some people are irresponsibly long MicroStrategy. I'm somewhere in the middle. What are your thoughts?
Yeah, and I agree with you. This is one of the most interesting topics. Colleagues at Swan, we're all kind of talking about it, trying to get our head around it. I have clients of Swan who are like, hey, I just want to talk to you about MicroStrategy because like you said, there's so many different opinions, and people have changed their opinions too. Myself included, I wouldn't say I ever did a deep dive, and it's not even like I put this stuff out on Twitter, so it's not like you're going to find a tweet from me about MicroStrategy, but I remember hearing the argument that the ETFs would make MicroStrategy obsolete because, oh, you just bought it as a Bitcoin proxy, but it's an equity and it has this other business and it trades at a multiple. As soon as the ETFs come out, the multiple is going to collapse and everyone's going to pour money into the ETFs. Like I said, I never did a deep dive on that, but I remember hearing it and I was like, yeah, that might be true. That, seems reasonable to me. Now I feel like that thesis has just been, gone out the window.
Yeah.
It's I've been proven wrong at this point. And I think the part that a lot of TradFi people are not getting correct, and even today I'm seeing some TradFi takes on Twitter that are basically saying the same thing. Why do you want to own MicroStrategy when he can just create shares and you can just own the underlying? Why would you want to do that? And what I think they're missing in trying to put it in the simplest terms is that he's increasing Bitcoin per share. So when you own one share of MicroStrategy, that represents, I'm be careful to not use the word claim because people would correctly correct that. And they would say, no, it's not really a claim. We use the word claim for debt instruments and things like that. Okay, true. But your one share in MicroStrategy is representative of a portion of their Bitcoin holdings. So if they're using their multiple to NAV and they're issuing stock when their stock price is high, and if they're issuing converts and they're stacking more Bitcoin in a way that your one share of MicroStrategy ends up representing more and more Bitcoin over time, that is a playbook that the ETFs cannot pull off. That's a playbook that you as an individual cannot pull off. And I think what's so hard for people to wrap their head around is that he's diluting the stock, so he's increasing more shares, obviously, but it's people are referring to it as accretive dilution, and it's really confusing people. But one, I would say this is not that new of a strategy. People have probably seen the clip of Saylor talking on CNBC, and the news anchor, the woman says, like, she uses the word Ponzi. She's, kind of tries to throw shade on Saylor in the strategy. And he basically says, well, what do you think developers in Manhattan have been doing with real estate for however many decades now? They take out debt. When the real estate increases in value, they take out more debt. And what they're doing is tapping capital markets to acquire a valuable appreciating asset. That, just replace real estate for Bitcoin here. And this is not a brand new playbook. Obviously, there's a lot of haters out there who think Bitcoin is a zero. If you think Bitcoin's a zero, then you don't care about tapping the capital markets to buy Bitcoin. But if Bitcoin's not a zero, then he has found this incredible playbook to run to increase Bitcoin per share. So I don't think it's like a shitcoin proxy. The only argument that you could say it's not like holding real Bitcoin from a permissionless, from an access perspective, from an ability to cross a border with it on your own bearer instrument. Obviously, MicroStrategy stock is none of those things, but he's running a playbook that I think is really interesting, and it comes down to the increasing Bitcoin per share, and he's been able to execute on it for many months now.
Yeah, that was very well said. And I think there's a lot of cope in the Bitcoin world because MicroStrategy has outperformed Bitcoin. And that's a hard bar to beat, but it did it. And it makes sense logically, right? Because if you're increasing Bitcoin per share, it's almost like if you own MicroStrategy stock, you own like equity in a business that is accumulating Bitcoin on your behalf versus you have Bitcoin in cold storage. That's great, permissionless. You can take it anywhere, keep it in your brain. Nobody can take it from you. All the things that make Bitcoin great, but it's not getting you more Bitcoin. And you don't want it to, quite frankly. But that's what MicroStrategy does. And moreover, the Bitcoiners, we've been talking in the abstract for years about how Bitcoin demonetizes other asset classes, takes market share from real estate, from stocks, and from bonds and gold. This is how it's actually taking market share from bonds, right? Because bond investors can't just go buy Bitcoin with its volatility. they have to buy some kind of Bitcoin proxy, which is these convertible notes. And the way I look at it, every convertible note offering they do is way oversubscribed. The corporate bond market is like $36 trillion in market cap, something ridiculous like that. And they're issuing these notes at like a $3 billion clip. So it's only scratching the surface. Do you think there's any limit to the amount of convertible notes they can offer? Because I mean, these bonds are just outperforming everything. They've even outperformed spot Bitcoin.
Yeah, I do think there's got to be some limit, and maybe we'll see if it gets hit by, MicroStrategy and copycats, so to speak. But my guess is that we are still some ways away from that point. I would also say that where that limit is very related to what the underlying Bitcoin price is doing. If we're in a world where Bitcoin's appreciating from 70K to 250K, there's going to be a lot of ability for people to tap capital markets and issue convertible bonds and have the convertible bonds perform well. And equity investors are going to continue to assign a multiple to NAV, the MNAV that everyone talks about. And options strategies are going to be attractive. So then you're going to attract more capital. So there's like a long way to go, especially in a world where Bitcoin is appreciating. It does slow down if Bitcoin goes in the other direction. I think that's very important to keep in mind. But it's not the strategy that at least Sailor is employing is pretty well managed so far. You can look at their debt in different ways, but one would be the ratio of the debt that they have outstanding at any given time and the market value of their Bitcoin. And that rate, the debt is basically like somewhere between 10 to 20% last that I checked. So they have a lot of buffer. Bitcoin would have to drop by a tremendous amount in order for them to be concerned that, oh, we have a lot of, big debt load here that our asset base is no longer covering as it was. But another way of saying that is like, yeah, if Bitcoin drops by 80%, something happened that, if that's your downside, it's like, yeah, we understand that if you're into Bitcoin or if you're into any equity that's linked to Bitcoin dropping 80% is a risk, no shit. So that's, a little bit of what I would say. We could probably get into more about like, we talked about like, what is he doing? Maybe we can talk a little bit more about why it works. But okay. Yeah. So I think part of the reason why it works is number one, you have to talk about investor mandates. And, you hit on this a little bit. You have huge pools of capital that cannot own spot Bitcoin. Maybe they can't even own an ETF. So those are just off the table for them. And these pools of capital, it's you might think like, oh, why can't they just change the mandate and be able to buy spot Bitcoin or the ETFs? It's not that easy. They just have a long history of being able to buy bonds, being able to buy stocks, being able to trade in options and all that stuff. All that is available to them today. And many of them would rather play with those tools that they are familiar with than just own spot Bitcoin. But importantly, Sailor is tapping different pools of capital. So the big ones right now would be equity investors with his stock, debt investors with the convertible bonds. He also has done some just straight maturity bonds, like no convertible feature, but those came with a bigger coupon. He might have even called them out, but he has used that part of the strategy as well. Within the convertible bond space, there are hedge funds that do more convertible arbitrage strategies. So they're not really in it to manage a portfolio of convertible bonds. They're just in it for the arbitrage opportunity. But there are those convertible bond funds that are just looking to run a convertible bond strategy because someone gives them money to do that. Those people are now being forced to buy MicroStrategy because it's the convertible bonds, because it's such an outperformer. So you're kind of tapping equity, you're tapping convertible bonds, you're tapping hedge funds who participate in the arbitrage, you're tapping players who like to play the options and play volatility. And you're doing this all while you're accreting Bitcoin per share. Right. So I hesitate to call it like a flywheel or a perpetual motion machine because that usually just scares people off. And I don't really believe there's like a totally free lunch. That's why I keep pointing back to what is he doing at the core. It's it's the Pierre Rochard speculative attack thesis. And Pierre wrote that article, I think it was 2014. So you're talking 10 years ago. But again, it's not like this is just made up for Bitcoin. This is a very common strategy to go into debt or use the equity markets, dollar denominated, and then buy an appreciating asset. And in this
Hmm.
case, the appreciating asset is Bitcoin. That's really what he's doing simply at the end of the day.
Yeah, I mean, it's to me, it's genius. How much room do you think there is for copycats of this? Because we've seen a few, and it makes sense. If you're any company, you should have a Bitcoin position. But to me, a lot of the demand for the convertible notes works because the options market is so liquid. They have so much Bitcoin. They've demonstrated commitment to the strategy, right? They're not going to just do a 180, sell all their Bitcoin, which would totally mess up everybody who's in any kind of position. Is there room for a lot of copycats, and or will MicroStrategy kind of always outcompete in this arena? If we think of it as like a new business almost, which it is, so the Bitcoin treasury company.
Yeah. I think we're going to find out the answer in the coming 12 months because I think we're definitely going to see some copycats in 2025. How much room there is, in addition to what I said about Bitcoin appreciation, that's definitely a factor for how many
Hmm.
copycats we have room for. But if you just look at the performance of Semler Scientific, of Metaplanet, like there's clearly room for some copycats there. But I'll give a bigger picture answer. And you said something earlier about, you want your companies to make money. You said something like that.
Yeah.
In this case, the way that they are making money is that they're accreting Bitcoin per share.
Hmm.
And to a Bitcoiner, this should make sense. Like if Bitcoin truly is a new form of money, or as the meme form is, we would say Bitcoin is the denominator now, right? Like that, we don't want dollars to be like Bitcoin's the denominator. If you really believe that, don't you want it to own an asset that is accumulating Bitcoin as fast as possible?
Hmm.
And like you said, owning your personal Bitcoin and being able to move with it comes with its own perks, but you're not acquiring more Bitcoin. You're not accumulating Bitcoin. And now there's obviously different ways to accumulate Bitcoin. You could run a business that does whatever, and your clients pay you in Bitcoin. Okay, you're accumulating Bitcoin, but then the question is, how quickly are you accumulating Bitcoin?
Hmm.
The Bitcoin miners, they accumulate Bitcoin. But then the question becomes, how quickly are you accumulating Bitcoin? And what definitely caught my eye was number one, the miners doing this playbook. The people who produce Bitcoin in the process of mining have issued convertible bonds and just taken the proceeds and bought Bitcoin. I think that tells you something very interesting because they ran the very simple math that said, hey, if we wanted to mine, I forget what the numbers are, but call it like 10,000 Bitcoin, or just for example's sake, if we wanted to mine 10,000 Bitcoin, it's going to take us this much time. If we want to just acquire 10,000 of Bitcoin by issuing convertible bonds and using the proceeds to buy Bitcoin, it's going to be this much time.
Right.
So that's kind of the playbook that he's running here. But again, to any Bitcoiner who's skeptical of this, I would point back to saying, if you believe Bitcoin's the denominator, if you believe we're all in a race to acquire Bitcoin as the new monetary asset, then you have to evaluate each strategy of how quickly are you acquiring Bitcoin. And whether we like it or not, tapping the capital markets to acquire Bitcoin is one of those strategies. It's not, manual labor, which we might respect it more. It is kind of a financial engineering thing. And I totally respect the people who don't really like that.
Hmm.
And maybe I'll just throw this out there as a closing thought. I would be curious to get your view, but there's something weird about it because Parker Lewis, Bitcoin is the great definancialization. I'm sure you're familiar with that
Hmm.
article. That's like a top 5 article for me because that's really the reason I'm in Bitcoin, because I think the world is over financialized and I think it's terrible for society. So I want Bitcoin to definancialize the world. And I think it will do that on a long enough time horizon. But as long as we're in this world where the dollar system exists and the Bitcoin system exists, there are these financial engineering opportunities. And I kind of reject it, like I said, because I don't really like financial engineering at its core. But if you believe that Bitcoin is the new form of money, then we are in a race to acquire Bitcoin. And some people are going to use these financial engineering techniques. So maybe that's why it rubs some people the wrong way, me included, but that's how I rationalize it. But I'm curious to hear your take.
That's an interesting thought. And maybe this is kind of like fiat going down, kicking and screaming, right? Like I heard Preston Pish one time describe kind of the end stage of fiat as like giving birth, right? I guess I'm not a dad, so I can't really fully relate, but when a woman's giving birth, right, she goes through contractions and they kind of get bigger and bigger as you get towards the actual birth. And so maybe this is an example of kind of those contractions, right? Sailor, these other companies are tapping the kind of irrationality of the fiat market, leveraging the fiat capital markets as much as they can to get as much Bitcoin as they can, which it's, that's their incentive. And I totally understand. I wish I were a multi-billion-dollar public corporation and could do the same, but I can't. I have to work for my Bitcoin as most people do. But that's what makes Bitcoin so great, is that it's not negative or zero sum. It's positive sum. We all win. When Sailor taps the capital markets to buy Bitcoin, he wins, I win, you win. It's amazing. And we'll kind of pivot to the next topic here. I think
Can I give
you and
one more
yeah,
comment on the copycats? This just came to me. So I think there is value in more than one company doing this, because if you start to think, this is okay, now you're starting to believe MicroStrategy is great. They're acquiring Bitcoin, they're doing it for me as a shareholder, they're tapping into these pools of capital, all this good stuff. You still might be slightly worried about, it's a single stock at the end of the day. There's still single stock risks that come with that. Management risk. They have to execute this strategy of managing their capital structure, spreading out the maturities, making sure they're giving the financial instruments to all those parties I mentioned appropriately. This is not just like they press a button and it happens. Like, there's a management that needs to execute. So my view is that the market might actually welcome it and look at, and I don't know what the right number is, so I don't even want to give it, but like a group of companies that are executing the MicroStrategy playbook, they might actually welcome that. So, because they're saying, okay, now I'm like diversified within this playbook rather than owning just one company that's doing it.
right. That's a great point. And actually, I also think there's more value too in, like, for example, a Metaplanet, someone in a different capital market, because Japanese investors can't buy MicroStrategy convertible notes. And I know there's a company called Liquid doing this in Canada. And so I imagine someone in the European market will do that. And it's a great point. I imagine at some point over the next couple of years, we'll get a MicroStrategy ETF, okay, full of all these companies running their famous play. You and kind of the rest of the Swan private team, I feel like, are a great indicator for like sentiment, because you're talking to high net worth individuals about Bitcoin who maybe they have a lot of Bitcoin, maybe they have no Bitcoin. How has the sentiment from your Swan private clients evolved throughout the year? Are you getting a lot of new inbounds? Like, what's the picture over there?
Yeah, man. And it is a cool spot to be in, because we get to have that wide range of conversations with people and, like you said, gauge sentiment to a certain extent. Um, it's been interesting. I would like, man, in hindsight, 24 has been a crazy year because you get the ETFs right at the beginning of the year. Bitcoin was like 30K last October.
Right.
Like only 14 months ago, Bitcoin was 30K. That's pretty nuts. Then you get the ETFs, and that was like a huge moment in Bitcoin's history, huge moment for legitimizing Bitcoin to a certain extent. There's a lot of normies that needed to see it in an ETF before they would even consider it. And the BlackRock stamp of approval, all that stuff. Even if we don't believe in it, there's a lot of people who do. Price wise, there was like a very temporary pump, and then it just like faded away as there was a rotation of Bitcoin out of GBTC into these other vehicles. And then people were like, oh, the ETFs were a flop. Price is not going anywhere. Turned out I think it was like a 30 or 40 day waiting period. And then the price started pumping again. and then we get up to 70. So now we've passed the previous all-time high. Then people are feeling very bullish. Then we chop around for a while between like 70 and 55K. And at those points, I definitely did have some clients who were just like a little exhausted from the chop. Some of them, I'm getting questions from clients like, do you think the ETF players are manipulating the price? Like, you can kind of tell when you're getting those questions from clients. It's like more so that I think they're frustrated because they thought the price was going to rocket up faster.
Right.
And that's like a good indication of people just getting a little frustrated. Then you have the election is the next obvious, marker here for things changing. Price goes from the high 60s on the eve of the election to now we're above 100. And I think that is one where it's like, an administration being not hostile to Bitcoin, winning the election in resounding style, and then appointing people like Scott Bessent, like David Sachs, people in Trump's inner circle. You mentioned Eric Trump as well, giving a speech about Bitcoin and actually seeming like he knows what he's talking about. Like all these things put together, plus, July, Trump goes to the Bitcoin conference. I was there in person. And then Cynthia Lummis is talking about it. Vivek Ramaswamy is talking about it. RFK is talking about it. And you start to think like, okay, I don't think the SBR, Strategic Bitcoin Reserve, is just like a talking point anymore. Now the signals are that it's going to happen in some form. What I mean by some form is that I think it's possible that the easiest path is they just say, hey, we own 200,000 Bitcoin, the US government. We're just going to continue to hold it. That's the start of the SBR, and we'll figure out how to add to it as time goes on. That's like a piece of cake. They could do that, no problem. And in my opinion, that is still massive, because if the wealthiest, most powerful country in the world says we hold 200,000 Bitcoin, we're going to continue to hold it as a strategic asset, just like we do for gold, then like, boom, you're already in nation state adoption there. And that's just, one scenario that doesn't even take that much for that to happen. The more bullish scenario is that they do something like the Cynthia Lummis bill. Doesn't have to look exactly like that, but anything that includes them adding Bitcoin on a recurring basis to the strategic reserve is now like, okay, you're not just holding the Bitcoin you have, you're going to continue to accumulate Bitcoin going forward. Then it's like every other big nation. There's a quote on Twitter. One of these guys who I think historically has not liked Bitcoin, and he said, "At this point, I'm buying Bitcoin not because I want to, but because I have no other choice." Something like that. And I was looking at, I like looked at it for an extra few seconds when I saw that tweet, and I'm just like, wow, that speaks volumes. I think he just sees what's happening, and he's like, yeah, there is no choice. And then someone in the comments pointed out what Saifedean Ammous has said: Bitcoin's more like gunpowder. It was not a conscious choice for people to adopt gunpowder. It was like, if your enemies adopt it and you don't, you die, you lose. So I think that guy was basically acknowledging that. And I think those are the dynamics we're seeing play out with nation states. And I think we're going to see it play out in 2025. Inauguration Day is just over a month away. So this will come up pretty soon.
That really is the essence of game theory at the end of the day, right? It's like, does communist China really want to adopt freedom money? No, but if America's going to do it and every other country's going to do it, then they have to do it. Does the United States of America, who has the reserve currency of the world, do they really want to adopt what could potentially be a competitor? Not necessarily, but if everyone else adopts Bitcoin, they have to. Might as well be the first one to do it. Yeah, I'm glad you brought that tweet up, because that really kind of encapsulates the entire idea. One thing about Trump is he's super pro economy, pro business, anti regulation. He's going to turn this ship around, get rid of Bidenomics, all that stuff. How much can he realistically do about the national debt and the deficit? What are your thoughts on that?
So my view is that he is not going to do much about outright decreasing the deficit. And further, he's not even going to do that much about decreasing the pace that we're adding to the deficit. maybe a little bit on the margins, but I don't think it'll be that much of a game changer. The reasons I say, I have a few reasons why I say that. One, if you actually listen to him on the campaign trail as he's doing interviews, um, well, number one, it's crazy that in so many of the interviews and the debates, they didn't even ask the candidates about the debt. Like that was just
Yeah.
that tells you a lot right there. You know, like all the things coming up, some formats didn't even ask the candidates about the debate about the debt. On the All In podcast, Trump was on there. This was the one time I saw him asked about the debt, and they did press him a little bit, like, "What are you going to do to reduce the debt?" His answer was to grow out of it, which is the answer of a lot of people too. But that's what he said. Like he's talking about increasing GDP so that debt to GDP comes down. That's what he's talking about. He's not like, let's cut Social Security, Medicare, and Medicaid like the Paul Ryan GOP era. Like that's just
Hmm.
not part of the GOP platform anymore. So I don't think he's going to do it. He's going to be much more pro growth. I think he will tout big GDP numbers. He's going to be pro energy production. That'll help keep a lid on CPI to a certain extent. Um, and he is not going to be cutting those big spending. The Social Security, Medicare, Medicaid, defense. That's like the vast majority of our budget. He's not
Hmm.
cutting those to a big degree. There's a clear question here about, well, what about Doge and what Ilana and Vivek are doing? I think Doge is fantastic. I love the motive behind it. But again, Doge is not going to meaningfully cut Medicare, Medicaid, Social Security, military. It will help with bureaucracy. It'll help with processes that are archaic and slow, but they're not going to go from, the US spending this many trillion per year to, 2 to 3 fewer $1 trillion. That's just not going to happen in my opinion. So I still think it's a nothing stops this train scenario, because I don't see the debt slowing down to a meaningful extent.
Yeah, I very much agree because, like you said, those main items plus interest on the debt, that's
Yeah.
more than they even bring in through tax revenue. So if you can't touch those four items, and so that you're going to continue to have a deficit no matter what, even if you do trim the fat around the margins and do all of that. What are your thoughts on CPI? We've actually talked extensively before on how this is a flawed metric of inflation. We get all that, but it's we had 6-7 months of disinflation earlier this year, but now it's remained kind of high. We're seeing people talk about the Federal Reserve might not cut as intensely as previously thought. What are your thoughts on interest rate policy, CPI going forward? And could this create headwinds for Bitcoin and other risk assets if they stop cutting?
Yeah, I think the answer is yes to that last one. That if they stop cutting, if we have like a 2022 scare again, oh my gosh, CPI prints 5%, 6%, 7%, that certainly could. And if the Fed is able to raise rates in response to that, I think that would cause equities to sell off. All things equal, it would cause Bitcoin to sell off. A kind of fascinating scenario would be, what if that happens? Fed's hiking, inflation's rising, but the US is adding to a Bitcoin strategic reserve at the same time. I have a feeling that the SBR would
I think so
overcome.
too.
Yeah, I think it
Yeah.
would. So we might have that scenario in 2025, because I don't think inflation is fully at rest. I just don't. Maybe it'll print 3 to 4% for some extended period of time. I think that is kind of a Goldilocks scenario for Trump, quite frankly, because I think he'll say he'll any politician in his position will be able to spin that. Okay, it's 3 to 4%. Look, under Biden it was 9%, and look at all these crazy bills that got passed that I wasn't a part of. This is lingering inflation from that. I'm gonna grow out of it. I'm gonna do all these great things for you, energy production, blah blah blah. 3 to 4%, I think Trump can kind of talk around it. Once it starts to get like 4, 5, 6%, that's harder. And that's where I think then the Fed might have to do something. But then the question becomes, is the Fed just going to quote unquote break something again by raising interest rates? And now this gets into like the nitty gritty of the financial system, but I think it's important for people to remember that something absolutely did break this
Yeah.
last interest rate hiking cycle, and it was the banking system. The difference, I think, in that, or just something very noteworthy, is something broke. But if you were waiting for an investment opportunity to invest at the point of breaking, that was not correct. Because in March of 2023, I think the S&P went down like 5 or 7% or something. Bitcoin barely went down and then actually went up again. So things can break in the financial system, but the Fed, the Treasury, the FDIC, they're getting very good at slapping duct tape on it and kicking the can down the road. So, and that's exactly what they did with BTFP, just create a new program on a Sunday, basically do yield curve control for the banks. Um, so I think that's the risk, is if inflation starts coming back, the Fed says, all right, maybe we start hiking again, but then they're going to be worried of, but do we F something up in the system somewhere? And I think my gut is that the dirty little secret is that the Fed doesn't want to raise rates in a material way. One, because they're worried about breaking something, and two, just because of the debt picture that the US is in. So I think unless inflation really rages to some high number, I think what we're more likely to see is that the Fed will just talk around it, and all this lingo that we know they use. Oh, it's headed in the right direction, and if you look at this particular sub metric of CPI, this one's headed in the right direction this month. So let's all focus on that. And I think that's what we're going to see for the next few years here.
Yeah, I think that was a pretty good synopsis. And you brought up an interesting point too earlier about the energy production potentially being able to keep CPI down, right? Where we could see, asset inflation and liquidity actually rising, but if they can get energy production to increase, then we may see energy prices go down, which compose like a decent chunk of the CPI. And I think there's a lot of interesting macro dynamics going on that it's kind of not been at the forefront of the conversation with the SBR and all that exciting stuff going on, but certainly very interesting dynamics at play. And I personally, I think Trump, one of his biggest kind of KPIs as a president, if so to speak, is stock market performance. So I don't see him kind of sitting there and allowing Powell to raise rates and cause equities to tank. I think that's highly unlikely.
For sure. I mean, we saw that in the first term. Like that was something Trump did. He tweeted, look at S&P all-time highs. Your 401k balances have never been higher. And that's one of the things where I'm not a huge fan of how Trump operates, because one of the reasons we're in Bitcoin is because we believe that asset price appreciation benefits certain segments of society and leaves behind other segments of society. So I don't think it's something to be cheerleaded of, oh look, asset prices are going through the roof. It's like that's not something I would cheerlead. But to your point, I don't, just looking at Trump's calculus, I think he will do everything in his power to not have a year where the S&P is down at all, let alone down 10 to 20%.
Yeah, 100%. It was like that in 2020, right? The COVID crashed, and your mom and pop had to shut down their store. But hey, all-time record stock market performance, right? That doesn't make any sense.
Yeah.
So you and I have been kind of joking back and forth all year about the quote-unquote year of the bond. You knew I was going to ask you about this. We're here in December. Hasn't quite been that year of the bond. Even over the last 3 months, the 10 years up about 80 basis points. 4 years in a row, the long bond ETF is down. What's going on here? Why have bonds performed so abysmally, and why is this kind of funny to us?
Yeah, I love this one. So I'm just looking at the 10-year today. Yeah, it's at like 439. So history here is that I used to work for GSAM, Goldman Sachs Asset Management. That's a multi-trillion-dollar asset manager. BlackRock is the world's largest asset manager. I don't really keep track of how many trillions each of them manage. I used to know those numbers, but we're talking about multi-trillion-dollar asset managers. BlackRock is the largest. GSAM is probably somewhere in the top 10, would be my guess. So I used to work on the fixed income team within GSAM, and the former head of that group, so like my boss's boss's boss, went on CNBC almost a year ago to the day, I bet. And he goes on there and says 2024 is going to be the year of bonds. and you better not miss it, or something like that. Like, don't make the mistake of missing it, something like that. But the headline that you can find is 2024 will be the year of bonds with this person. And you and I started joking about it, like even back then, because I was right off the bat, I was like, I don't see this happening. Maybe I'll be proven wrong, but I don't think 2024 is going to be a good year for bonds. And you and I even had the nuanced view. We were like, maybe it'll be positive nominal performance for bonds. Maybe we could see that happening. But if it did happen, it would probably be negative real performance, meaning if you back out inflation, that it would be negative or flat. And then on a relative basis, equities and Bitcoin and gold, they're going to outperform bonds. You and I were saying this to each other like in the beginning of 2024. And in this one, we get to take a victory lap here because bonds have been the worst performing asset class, just objectively. Everything else has outperformed them. So, what are the takeaways here? One, I would say just remember that because someone who runs a huge team within a $1 trillion+ asset manager doesn't mean they have good investment calls. And this is someone who's, been in markets for longer than you've been alive, Mitch. So everyone needs to remember that just because you're in a seat like that doesn't mean you make good market calls. And then number two, just a little bit on like, why is this the case? In an environment where Lynn Alden has called it fiscal dominance, I think that's the right term to think about it. This is the nothing stops this train. Deficits are going to continue. Rates cannot be hiked to a meaningful extent. Inflation is going to run hot for an extended period of time. That is not an environment where you want to own bonds. So not only has it been the case that 2024 has been a bad year for bonds, it might be a bad, well, you already said it in the intro to this question. The last 4 years, did you say the long bond has been negative? So like we're already 4 years into this period of bonds being a terrible investment. It might be another 4 years or another 5 years. So I would just caution people, bonds, but importantly, there was like from 1980 basically to 2020, bonds were a good investment to hold. And if you just closed your eyes and held, I don't know, 20, 30, 40% of your portfolio in bonds, you were pretty happy with it. That regime has changed since 2020. And I think we're going to be in this new regime for some time. We can debate about how long. But yeah, punchline is 2024 was definitely not the year of bonds. And I'm not betting on 2025 being the year of bonds either.
No. Yeah, it's kind of silly when you think about it. I mean, what would it take for bonds to actually catch a bid? Because at this point, foreign governments have stopped buying US debt because we rug pulled Russia. No, they don't want that counterparty risk. Institutions are maybe a little bit smarter now, knowing that you're going to have negative real returns. The banks got totally rug pulled on their bonds, right? So to me, the only way for yields to come down materially, especially in longer bonds, would be for the Federal Reserve to just print money and buy them themselves, which in that scenario is kind of the nuance. Everything else goes up way more than the actual bonds. So like, Is there any scenario where you want to hold long-term paper? I don't see it. Could you articulate a potential bull case for bonds? Is there something I'm missing here?
I think you're correct. The only way that I could see someone being really happy that they owned bonds is much more of a short-term trade perspective. Like if you really think we're heading for a COVID-like environment or like some crazy geopolitical event that causes quote unquote risk assets, so like stocks basically, to sell off in a major way in a short period of time, and then people go flight to safety to bonds and the Fed cuts at the same time. This is basically what happened during COVID. And COVID was super unique. So I think if anyone's, preparing their portfolio for another COVID to happen, that's, not a wise move. But it would have to be something like that. Massive risk off move. The Fed has some sort of cover to cut rates to zero, and there's a flight to safety into bonds. But just like with COVID, that was a trade that you wanted to get out of. As soon as interest rates went to zero and you got your pop in bonds, like that was the time to get out and rotate into stocks. So if there's a world where bonds do well, I think it's as a short-term trade, and you better be ready to get out of it at the right time.
Yeah, I think that was well said. Last question for you. What do you think about this 2% recommended allocation into Bitcoin from BlackRock? I don't know if you saw that.
Yeah, and I loved the who I don't know who to give credit for it, but the tweet online that said Sailor saw this 2% recommended allocation, and he said, "Oh, 2% of the total supply." Okay, um, someone gets credit for that. That was very clever. I think this is the starting point of asset allocators saying, "Hey, Bitcoin is a persistent part of your portfolio." And, 2% kind of makes sense. I wasn't expecting them to say, oh, remember 60/40, take the bonds and make it 40% Bitcoin. That would just be too much. But this is where they're starting. They're saying, hey, 2%. I haven't gotten my hands on the actual report from BlackRock, but I've seen articles describing it. I think they're using all the, typical lingo that asset allocators, financial advisors, RIAs would want to see. They're talking about correlation, they're talking about Sharpe ratios, historical performance, what makes it different, how it's gotten regulatory clarity. It's actually a pretty convincing story if someone can have an open enough mind as an FA or a family office or whatever. So
Mm-hmm.
I think this is just another brick in the wall of reputable asset allocators saying, yeah, having some percentage of your wealth in Bitcoin makes sense.
Yeah. There's 900 trillion roughly in wealth. 2% of that, 18 trillion. That's like almost $1 million per Bitcoin. It's about 800,000. So that's, that's quite the upside here. And actually, specifically, they got the number. I read the report. It's, if you have a 60/40 portfolio, the 2% is kind of roughly your Mag 7 exposure. Like if you're holding S&P. So each Mag 7 stock is about 2% of your total portfolio. So if you think Bitcoin is another digital tech monopoly, then you would want equivalent exposure within your portfolio. It's a good report. I'll send it to you afterwards.
Yeah, if you have the actual report, I would love to see it.
Yeah. John, I appreciate you coming on here. It's been a blast. Where do you want to send the audience to keep up with what you're doing?
Yeah, man. So John at Swan on Twitter. There's underscores in between those. So it's John _@ _Swan. I'm trying to keep up with tweeting, but to be perfectly honest, the last month since the election basically has been nonstop for us. We have tons of existing Swan private clients doing more with us. We have new clients coming in. So I'm kind of overwhelmed with that. But hey, that's as good a reason as any to be busy. Other than Twitter, I would say I try to post some stuff to LinkedIn because I've got hundreds of connections that actually look at LinkedIn and they don't ever go on Twitter. So I try to post to that normie TradFi world a bit from my 13 years at Goldman. So those are the two places to find me. I try to write an article every now and then about an interesting topic in Bitcoin. Yeah, I think that covers it.
Awesome. Appreciate you coming on, brother.
Love it, Mitch. Thanks for having me, man.